Okay. Hi, I'm Peter Rose, founder of Longwood Currency Trading. The Forex trading bad habit you absolutely must avoid. I'm outside today. Yep. It's late mid-October of 2024, and you can see the leaves turning, and everything is just New England beautiful. Today's travelogue of New England. Before we talk about bad habits. Look, the bad habit is having an interest in paying attention to the economic news. I've been in a losing streak now for months. And it comes on the tail of losing a lot of money. So I trade sporadically right now because I was unsure of what was causing the issue. I thought it was something wrong with my rules. And I kept going over my rules. I've got a whiteboard full of the rules, and I keep redoing them, and they keep coming out the same. So it can't be the rules. It must be me. And it is. If you know from my background, I spent 40 years in real estate and retired a millionaire because of my real estate, not because of my software engineering job that I had for 33 years or any of that. That money all went to Disney World and good red wine. The retirement came from the real estate investment. So I think I know what I'm doing. I mean, you know, I did 40 years of real estate investment, so I came out on the top side of it. So I guess I know what I'm doing. And I'm gonna get a backdrop here of these beautiful, beautiful leaves. So anyway, the problem with real estate is that the risk management is real estate. You have to understand risk management, and like anything else, like in trading, there are rules. There are risk management rules that you have to follow. Most people just think it's evaluating spreadsheets and pro formas and all that other kind of shit, but there are rules of process that need to be adhered to. There's psychological aspects in order to trading, and whether the trading is real estate long-term, 40 years, or whether it's scalping. You have to build a framework of the conduct of your life in relationship to the asset that you're trading. Some people can trade multiple assets and come out great. Some people can have a business and do real estate and be an artist and a skilled pianist, and on it goes. Great, Renaissance, that's great. I'm not one of those, you're not one of those. Let's get realistic about life and the expectation of that life. So in real estate, that risk management comes from, or is based on rules that adhere to the risk management principles all the way through the life cycle of your career in real estate. That risk management process, not the rules, but the risk management process is very, very different than the principles you need to apply in trading, Forex. And I've brought this up many times, and I've never really been affected by it in the past, because I've been just plugging along. I mean, I made a huge mistake last year, 2023. I lost 6 figures. Okay, so everybody's going to lose. It's just a matter of how much are you going to lose and when you're going to figure out what you're doing wrong that's going to stop you from losing. So I've taken a couple of bad hits this year as well. And so I've had the opportunity in slowing down in the trading, thinking that I was just in a statistical drawdown, which I was. I just happened to have one of those huge losses in the middle of that. But once I've stepped back from trading, because I haven't really traded very much in the last, 3 months or so, 4 months. I've made trades, I follow rules, and I haven't traded in a while, so I sit down and I look at the chart and I go, oh, that looks like a good deal, and boom, and I'll make a couple $100. because I've reduced the size of my lot size. I've reduced the size of my expectation. I've reduced everything, because I found trading 20, 25 lots at a time and having basically the down payment of a house at stake with every trade was not necessary for me at 75 years of age. I sort of had a goal that I would have liked to have made $1 million very quickly, you know, over a 3 or 4 year period of time for my currency trading that I did in real estate, because I think you can accelerate that by orders of magnitude in trading as opposed to real estate. And here is the bad habit and the problem, is that I did not really understand, even though I said that the risk management is different in real estate than it is in trading, and I have to be aware of all those different kinds of things. The real estate risk management is more than just a bad habit. It's ingrained in my DNA, and I discovered that in looking at my rules, and I pulled out one of the conditions in the rules, and I'm actually writing a white paper on that, and saw what the problem was that I'm having. And it has to do with the integration of the real estate risk management principles without me even knowing about it into my own thought process in trading. And it overrides the conditions of some of the rules that I have. It hides itself into looking like it's following the condition, but it's not. And that condition that I've always said in my videos is that you shouldn't trade the news. Now, economic indicator releases, that's not news. Those are economic data points that you pay attention to. I'm talking about the news. What's the president of Brazil going to do to the economy that's going to affect their currency? What's the elections in the United States that we're rapidly approaching? What's that going to do with the economy and the value of the dollar? When interest rates are increasing in Switzerland as opposed to New Zealand, what's the effect on that pair? What are the conditions, the economic conditions that are currently happening in the unemployment problem that England, for example, is having? How does that relate to the Brexit issue that just went by? That's all news. And that's all really interesting stuff. I'm a pretty bright guy, and I'm interested in so many different things. When I get up in the morning, as I have my cup of coffee, if I'm not going to be trading right away, I'm looking at CNN, PBS, Fox, AP, and Reuters, 5 news sources, to gather my news to try to figure out, because everybody lies, so you got to kind of go through the left and the right and the center so-called news sources in order to see what's going on. And then I'm going to read the economic news of a couple of the countries that I'm interested in, and just become macroeconomically alert to what's going on in the world. And I just have sort of done that out of an interest in those topics. Not that I would use them, because I know that I don't have enough information. I'm not an economist. I can't look at these markets and say, oh, because this, and this happens, therefore this should happen. But guess what? When you read that stuff, that's exactly what happens. Because that's what I went through in 40 years of real estate. Everything counted. In the town where I owned properties, if the city was considering a bond issue for something, I had to take that into consideration in my real estate. What were the building codes? What were they? They were trying to enhance the building codes in Portsmouth, New Hampshire, for example, a very famous town because of its seafaring and mercantile historical background, that the building codes and the historical commission greatly affect what you can and what you can't do to property you own in real estate. The fact that you are interested in these things and you read about them can be, number one, for entertainment and intellectual stimulation, or number two, it can be because you're trying to solve problems. In real estate, you need to pay attention to the news. You need to do the news, and you're able to use the news to your advantage because the news is all about the local situation. I mean, obviously, if you're going to have a high-performance car speedway 5 miles away, going to be built from where your real estate is, that's going to affect you. But in the general considerations, your news is what's going on with the political situation in the city where you're at, the historical commission, if there is one, the building codes. You know, I had a small issue in one of my apartment buildings one time. It was no major deal. It was an ember from a charcoal grill from across the street that fell on the porch and smoked a little bit. The tenant came out and threw some water on it, but he reported it to me, but didn't know what it was, and they called the fire department, which is, that, you know, that's fine, and they came out and they go, oh, okay, that's fine. But because we had a call, we now have to go into the building and we have to investigate everything. That cost me $10,000 because I had to change the smoke detectors, and they made me change a whole bunch of other things because it was out of code. And so I have to be aware of what those codes are when I'm out of code, and I have to be preemptive to that and say, oh, this thing's out of code, so if something happens to the building, I need to change this now so I don't get hit with all these things when it gets checked on. So that's using the news in order to be proactive in having a successful real estate portfolio. You can't do that in currency trading because you're talking about the economic news from not one country, but two. You have a different culture in that other country. Let's say you're trading dollar Swiss, and you're an American citizen. You trade dollar Swiss. Well, you know all about America. You grew up in it. You're the United States. You get the politics. You get the news and all that other kind of crap. It's so extensive that you can only, unless you're an economist and you do this full time, there's only a small part of that you can absorb and use. But what are you going to do about the Swiss economy? What do you know about that? How are you going to make judgments on what you should do with the Swissy if you're going to try to trade that by reading the news? You're not going to be able to do anything because you don't have the bandwidth, the intelligence, and the scope of time. The institutional traders and the bank traders have unlimited resources. They hire hundreds of PhDs in economics and land science and physics, and I mean just everything, all kinds of different disciplines working together in a synergetic manner to look at the economy in a holistic manner, and not just saying, wow, you know, the unemployment rate just shot way up, and so therefore the interest rates are going to have to do this. It just doesn't work that way. So in looking back over the last 4 or 5 months of my trading, I see exactly, because I could look back at what those trades were and why they failed. At the period when I was there, I was really interested in the changes in the different economies between the two pair countries that I trade. But there's so much going on that became, instead of background entertainment, it comes to the foreground, but in a very sinister way, because it obfuscates, it shadows the real conditions of the rules and slants them toward me listening to the sirens calling me, like they did the sailors, about, oh, Peter, this should happen because the interest rates are going to go down less here than they are going to go there. What? So what? But you get all of these data points, so many data points that are unobtrusive, and they're not hitting you in the face. It's just data. You read an article and it just becomes part of the background of your life. Now, most of you can avoid that because you don't have the real estate differential and risk management that I have. That's my problem. And I'm not copping a plea, oh, poor me, I got real estate problems, blah, 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 blah. Maybe you have something in your background that's going to prevent you from being successful at trading, and it's simply because of that thing that's in the background that you don't realize. But what that thing in the background does is it makes you become biased towards certain information, certain types of information. I've had videos out where I've said that, when you're looking at the economic conditions of the United States, you're looking at non-farm payrolls. This is as to what the Fed will probably do with their interest rate policy. Look at the non-farm payrolls, the producer price index, real estate, housing starts, building permits, all that sort of stuff. There's four. I had a video one time and I rattled out four of those that, you should probably pay attention to these because they're the generic signals that will guide the Federal Reserve in determining whether their interest rates are going to change. So you can become, oh, I know these four things and I'm going to study those four things and therefore I'm going to know what the Fed's going to do and therefore I know what effect that's going to have on the currency pair. That's a deadly mistake. Because the Fed isn't looking at four things. The Fed is looking at 100 things. And they've got dozens and dozens of the smartest guys in economics and PhDs looking at this stuff. And they all have conflicting ideas. And so they come together. And that's what the Federal Reserve banking system is all about. You have the 12 Federal Reserve districts. And you have those 12 guys get together. And they take their opinions and discuss them academically and then come to the conclusion that the interest rate should go up another 0.25%. How are you going to do that? And yet you think you're going to look at the news and make a decision about that? Or you're not even thinking about that. You're like me, you just enjoy looking at that stuff and seeing what the two countries are that you're trading because it's interesting. This is interesting stuff. If you're just trading currencies because you're trying to make $1 million, you're full of shit and you're not going to be a success. You have to have a passion for the trading process. And you have to understand a little bit about what causes the order flow and what causes changes in that order flow. So you have to know a little bit about economics and process, but you don't have to know very much. Because the more that you know, the more that's going to seep into your decision-making process and creating a bias for the direction that the price is going to go in. Don't do it! Oh, God. That's all I got to say. Peter Rose, Longwood Currency Trading. Have a great day and have a great trading day.